Hello, welcome to the weekly markets bulletin with buysilver.org. Stock markets around the world proved mildly volatile last week, reacting to debt news from Europe and the USA. The beginning of the week saw further falls as Europe's woes continued, with a debt rescue package for Greece seemingly some way off. However, by Tuesday, European leaders had started to talk bullishly about their hopes for a far-reaching package to be enforced by the end of the week, and markets started to react a little more positively. With little other economic news out during the week, markets stabilised through Wednesday and Thursday, and then sought to make gains upon confirmation that the package for Greece had been agreed. Starting positively on Friday morning in reaction to the debt refinancing news, and also better than expected numbers from JP Morgan overnight in the States, all looked on a firmer footing than it has for weeks. However, as the news was digested, markets fell back a little from the day's highs. Analysts noted that the UK has not participated in the €96 billion bailout, that the amount of Greek debt needing immediate solving is, in fact, in the order of around €150 billion, and now sights are firmly set on the other countries at risk, mainly Italy, Spain, Portugal and Ireland. Wall Street, too, failed to remain in positive territory on Friday. Sarkozy, France's president, is already talking about the European Emergency Fund becoming the equivalent of a European IMF. This must be music to the ears of US lawmakers. Though stock markets regained the ground lost the previous week, there is still plenty of nervousness around. Eyes over the coming months will be firmly on debt across Europe and the USA. Meanwhile, silver and gold reacted well during the week. Though turning south briefly, both metals regained their poise toward the end of the week. Indeed, silver has broken through the $40 level and closed above it. So, let's have a look at this action on the charts. Here we concentrated on the FTSE and the Dow. You can see that the beginning of the week the markets were a little bit weaker on European debt concerns, and then through Tuesday and Wednesday and indeed Thursday began to rise as hopes of a deal from Europe surfaced. With that deal coming in on Thursday, hopes were in fact for a very good day Thursday, Friday. But the FTSE and other European markets failed to hold on to any of the gains at the opening on Friday, after analyst comments and after some time was given for people just to digest the exact number crunching that European leaders have done in order to rescue Greece for a second time. Okay, so with this in mind, it might be worth looking at the longer term picture. So let's have a look at the Dow, and I want to introduce a concept of sleeping markets. So if we have a look at the Dow from 1929 to current day, we see three sleeping phases and two bullish phases, very clearly on this chart. So the first, what I would term a sleeping phase, is 1929 to 1954. There's no overall performance on the positive side here. Indeed, depending on when you bought and sold, you could have lost an awful lot of money during that period. But if you'd held for the 25 years, you'd have broken about level. Then, from 55 to 65, we see a stock market rise, before another prolonged period of non-performance, of overall flat performance, slightly up, slightly down during another 18 years from 65 through to 83. Again, from 84 to around about 2000, 2001, we see a very steep rise on this chart. We see it here within that circle there, and again it's around about 15-16 years of really spectacular market rises, highlighted maybe by the one bad year, which was 1987, the stock market crash where everything went petong all around the world. Then from 2000 to current days, we've really seen very little to no positive performance in the Dow. In fact, I think it's about 800 or 900 points up in 11 years. So around about 9–10% rise over 11 years, nothing to write home about. With these figures in mind, maybe it's worth looking at the silver price this week. And again, we can see some sort of a correlation here to stock markets. We see at the beginning of the week, as stock markets were on a slight downward momentum, silver posted some gains, moving up to 40.5 towards $41 before, through Wednesday, Thursday, we pulled back again. We hit last week's 38.20, 38.30, and silver started to bounce, remaining in positive territory and closing above 40. So there's correlation between silver and stock markets, an inverse correlation if you like. So let's have a look at a longer term chart for silver and look at the 25-year view. And we can see that from around about 1984, 1985, all the way through to 2001, 2002, silver really hasn't moved up at all. In fact, it's traded very, very much sideways. You can see here, highlighted on this chart, the 1987 stock market crash. Silver doubled in price almost, from around about $5–6 to around about $10 an ounce. It wasn't until the latest sleep phase of this market, of this stock market, took hold that silver started to rise again. So we can see that a rising silver price goes hand in hand with the stock market, what I like to term a sleep period. So let's have a look at those sleep periods once more. We see a 25-year sleep period, 29 to 54. We see 18, 19 years, 65 to 83. And again, we see so far 10 or 11 years, 2000 to now, sleeping stock markets. No upward performance. This sort of belies the theory of financial advisors saying it's time in the markets and not timing of the markets. I would suggest it's very, very much timing of the markets that really give your portfolio its massive performance, unless of course you want to be in for the long term. Long term on this chart looks very much like about 80 years. I very much doubt that anyone's got that sort of time horizon on their investments. So let's come back to silver again. Let's just finish off with this. If the current sleep phase of the stock markets lasts like the 1929 to 1954 period, we could potentially see another 14 years of a silver bull market that so far has lasted about 9 or 10 years. So until next time, here's buysilver.org, leaving you that with that information. Please feel free to visit www.buysilver.org for daily news and views on silver investing. Until next week, good investing and keep it in your pocket.